Welcome to CNBC's Crypto World. I'm Kate Rooney. We are outside today of the Manhattan court where Sam Bankman-Fried's criminal trial does kick off. It's expected to last about 6 weeks. It's all about jury duty today, so they are still trying to find an impartial and fair group of jurors. They're asking questions about, do you have any preconceptions about cryptocurrency or Sam Bankman-Fried and FTX? Also, any thoughts on things like ADHD that might affect Sam Bankman-Fried's body language, for example? They're asking the jurors about that as well. We're set to get opening arguments after that, and then also witness testimony. So some of the high-profile executives that have pleaded guilty are expected to testify. You've got Caroline Ellison, Gary Wang, and Nishad Singh. Sam Bankman-Fried's inner circle that has been cooperating with the prosecution. Judge Kaplan, the judge in this case, told Sam Bankman-Fried directly, even if your lawyers say that you shouldn't testify, you do have the right to do so, and said to raise his hand. Prosecutors are saying that this could be one of the largest cases of financial fraud in the history of the U.S. if Sam Bankman-Fried is found guilty. Bankman-Fried has pleaded not guilty to 7 counts of fraud and conspiracy. He is accused of essentially siphoning money from his cryptocurrency exchange, FTX, to a sister investment firm, hedge fund, Alameda. He has argued that he didn't know that there were issues at FTX and that he did not intend to commit fraud. For a little more context, Crypto World looked into what this case might mean for regulation.
The collapse of FTX turned its founder, Sam Bankman-Fried, from white knight to public enemy number 1 in record time.
The FTX group have commenced voluntary proceedings under Chapter 11 of the U.S. Bankruptcy Code.
Wiped out. Total wipeout.
Again, all
and
those.
Bankman-Fried has resigned his role and will remain to assist in an orderly transition.
We saw a wave of charges against the FTX founder in the past 24 hours. He was taken into custody in the Bahamas.
Sam Bankman-Fried set to fly back to the U.S. today to face what's now multiple criminal charges tied to the collapse of his crypto exchange.
Fast forward a year later, the crypto exchange is scrambling to return more than $8 billion to creditors as it marches through bankruptcy proceedings. And Sam Bankman-Fried is in jail and on trial facing multiple federal fraud and conspiracy charges. As legal pressure mounted at the end of 2022, SBF spoke publicly about the collapse against his lawyer's advice.
How concerned are you about criminal liability at this point?
So I don't think that, obviously I don't personally think that I have, but I think the real answer is that's not, it sounds weird to say, but I think the real answer is that's not what I'm focusing on.
Just 2 weeks after that, SBF was arrested in the Bahamas. 9 days later, he was extradited to the U.S., just as former colleagues Caroline Ellison, the head of Alameda Research, and Gary Wang, co-founder of FTX, pleaded guilty to federal charges and began cooperating with prosecutors. In January, though, SBF pleaded not guilty to charges against him.
I started using FTX over a couple of years ago. I started by depositing a few $100,000 the first time, and over time I deposited about $12 million on the exchange. When it went down, I still had about over a couple $1 million, mostly in FTT and Solana. That was also staked for 14 plus days, so couldn't withdraw it.
I don't think myself or anyone else anticipated how quickly the downfall would have happened and how drastic it would be.
The trial date was set, October 3rd, and in the meantime, SBF was allowed to stay with his parents in California so long as he stuck to the terms of his bail. But he just kept talking. Blog posts trying to explain the collapse of FTX, messages and interviews with reporters, and DMs on social media eventually landed him in hot water. In March, the court revised his bail conditions to restrict him to a flip phone and basic laptop, cracking down on his communications. That didn't seem to stop him, though. In August, SBF landed in court again after prosecutors accused him of leaking Caroline Ellison's diary entries to the New York Times. The judge agreed, revoked his bail, and sent him to a Brooklyn jail until his trial.
With the trial coming up, it's sad and it's disappointing on a personal level. Thinking about not just the hard work that we tried to do on the FTX US side, all the colleagues, all the customers that were affected, but mostly the fact that even a year later, this is still going on.
But now that the trial is kicking off, what's the case prosecutors are making exactly? SBF is facing 7 charges, including money laundering and fraud. Prosecutors claim that for about 3 years, SBF and his colleagues ran a massive conspiracy.
First, we charged that from 2019 until earlier this year, Bankman-Fried and his co-conspirators stole billions of dollars from FTX customers. He used that money for his personal benefit, including to make personal investments and to cover expenses and debts of his hedge fund, Alameda Research.
Specifically, this indictment alleges that SBF misappropriated and embezzled FTX customer deposits and used the billions of dollars to fund speculative venture investments and to, quote, help fund over $100 million in campaign contributions to Democrats and Republicans to seek to influence cryptocurrency regulation, among other things. He has also been accused of conspiring with others to make false, fraudulent statements and representations to FTX's investors and Alameda's lenders, including by providing false financial information. Caroline Ellison and Gary Wong, two of his former colleagues, also faced fraud charges last year and both pleaded guilty. They're cooperating with prosecutors in their case against SBF. More recently, in September, Executive Ryan Salem pleaded guilty specifically to campaign finance and money transmitting crimes. He claims those contributions were made at the behest of Bankman-Fried. SBF faces up to 115 years in jail. We reached out to his lawyers ahead of the trial, but didn't hear back. Publicly, he of course denies the allegations made by prosecutors. At last year's DealBook Summit, though, he said he was responsible for the failures at the company.
I'm deeply sorry about what happened. There absolutely were management failures, huge management failures. I bear responsibility for that. There were oversight failures, transparency failures, reporting, like so many things we should have had in place. I think that a lot of it was on the risk management side.
I was surprised that he spoke at the summit at all. As a lawyer, my advice to any client that found himself in a situation like he was in would be to not speak. There is no defense for him anymore that he did nothing wrong. The defense is whether he did something intentionally and fraudulently wrong, or whether he was negligent and engaged in mismanagement short of fraud.
Sam hasn't yet been able to, take, responsibility and to, receive accountability for his actions up to this point. And the fact that it's sort of dragged on this long to the very bitter end with this trial, I think is not, as a result, we haven't really been able to get closure in the industry. So I think all of us, watching what's going to happen unfold over the next, 4 to 6 weeks are looking forward to some closure on this whole ordeal.
Regardless of the outcome in the trial of Sam Bankman-Fried, the FTX collapse led to a huge erosion of trust and has major implications for the crypto industry.
The FTX bankruptcy really took an institution that was starting to be viewed as very legitimate, both by Wall Street as well as lawmakers on Capitol Hill, and destroyed that reputation.
One thing that was interesting after the failure of FTX was how the remainder of the crypto industry quickly rushed to paint Sam Bankman-Fried as a bad apple. Many of the things that went wrong with FTX are symptomatic of the crypto industry writ large. And so what I think we'll see during the trial is, more attempts to distance FTX from what will be characterized as quote unquote good crypto. But in fact, a lot of the problems that led to FTX's failure continue to persist in the crypto industry that remains.
That's why many industry insiders argue that crypto regulation should be a priority for lawmakers, especially now. And there have been some developments on the regulatory front here in the US in the months after FTX's implosion. In July, US lawmakers advanced the Fit for the 21st Century Act to establish a crypto framework. And more recently, Senator Elizabeth Warren's crypto money laundering bill has been gaining more support on Capitol Hill.
It's hard to predict what will happen with this case. The one thing we can say for sure is that it will add more attention and fuel to the current debate that we're seeing over how Washington treats crypto going forward.
That's it for Crypto World. We'll be back again tomorrow with a lot more. We'll see you then.